This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. We've started to see a little bit of a choppy trade here, but really it's been a very slow news week. So we've seen corn kind of act like a stick in the mud despite having great exports this morning. I still think that the corn market has potential to work out to the upside, but we really want to see additional new positive information get us out above technical resistance, and that resistance pocket that we've been talking about for the last week continues to be intact. 377 to 381. This is the top end of the range after breaking down from last month's USDA report. If we can achieve consecutive closes out above here, I think the market has the opportunity to run and close that gap from that last month's USDA report closer to 392 and 3/4 on the support side. The bulls must defend 360 to 363. This is the previous contract lows, now kind of a pivot point for us here going forward. Now, as far as the soybeans are concerned, pretty optimistic here. 880 to 885 is previous resistance, now becomes support. This represents the 50 and 100-day moving average. If the bulls can defend this here throughout the rest of the week, which is really not much left, about a session left, what's left of today as well, I think we're in a good shape. There are trade delegates meeting in Washington, D.C. between the U.S. and China. Don't expect anything of major substance to come of that, but I wouldn't be surprised to see a positive spin. But if we're able to defend technical support and get back out above $9, I think that opens the door for a short covering rally towards 913 to 915, which is the 200-day moving average, but I think more importantly, the 50% retracement from the contract highs to contract lows. So corn, beans, still pretty friendly on. Wheat, still pretty friendly on as well, but more so that Kansas City contract for December. $4 is a must-hold level for us. If we can achieve consecutive closes out above 410, I think that opens the door for a run at 430, which is a breakdown point from last month's USDA report. So that's what we're looking at. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.